Bitcoin's halving has come and gone, and now the crypto world is asking what comes next. Every 4 years, the Bitcoin network undergoes a scheduled event called the halving. It cuts the block reward that miners receive in half. In simple terms, Bitcoin just got harder to earn. This naturally reduces the flow of new Bitcoin into the market. And as history has shown, that change in supply can shift the entire trajectory of the market. But this isn't just about supply and demand. The halving is a reset economically, psychologically, and politically. And if you zoom out, every halving in Bitcoin's history has marked the beginning of something big. Let's start with the basics. The last halving, which happened in April 2024, reduced the miner reward from 6.25 BTC to 3.125 BTC. That means fewer new Bitcoins are entering circulation every 10 minutes. Scarcity just doubled. And if demand stays the same or increases, the price, in theory, should go up. But as we all know, the crypto market doesn't always play by textbook rules. Still, if we look at history, there's a pattern. After the 2012 halving, Bitcoin went on a massive run. After the 2016 halving, it hit $20,000. After the 2020 halving, it hit nearly $70,000. So what about now? Well, the cycle feels different. Why? Because this time, the players are bigger. Institutions have arrived. In early 2024, the first spot Bitcoin ETFs were approved in the US. That's a game changer. Pension funds, hedge funds, and asset managers can now get Bitcoin exposure without ever touching a wallet or a private key. That kind of capital wasn't even on the table in previous cycles. Post-halving, the institutional demand could fuel a more sustained, less volatile trend. But there is another side to the story of the miners. They're now earning half as much in Bitcoin for the same amount of work. That forces them to become more efficient. The least profitable miners will shut down. Others will merge, consolidate, or move to regions with cheaper electricity. The result? Fewer players, more advanced operations, and potentially more reliance on renewable energy. We're already seeing signs of a mining shift toward cleaner, cheaper, and more sustainable setups. Meanwhile, retail investors are starting to pay attention again. As prices begin to climb, news stories resurface. Influencers tweet bullish shots. YouTube fills up with price predictions. FOMO begins. But this time, things are a little more mature. More investors know what dollar cost averaging is. More people understand what it means to self-custody their crypto. Still, many are just here for the gains, and that brings risk. That's why education is more important than ever. Post-halving bull runs can be powerful, but also full of traps. Altcoin pumps, scams, rug pulls, fake influencers, they all come out when the market heats up. It's critical for investors and you in order to know how to navigate the hype. Regulation will also play a huge role in what comes next. Governments around the world are racing to create clear rules for crypto. Some see this as a threat, others as an opportunity. In the US, for example, regulatory clarity could open the door for even more financial products, more ETFs, more crypto-backed instruments, more investor protections. If done right, this could bring massive adoption and legitimacy to the space. Now, what about Bitcoin itself? From a technology standpoint, the Bitcoin network remains rock solid. Its core protocol hasn't changed much, and that's by design. But development is still happening, especially around the Lightning Network, Bitcoin's Layer 2 scaling solution. With lower block rewards, miners rely more on fees, which may rise. That's where Lightning helps, enabling fast, cheap transactions without bloating the main chain. More adoption here means more usability for real-world payments. There's also a growing trend of Bitcoin being added to national and corporate balance sheets. El Salvador started it. Other countries may follow. And now, some companies are holding Bitcoin as a treasury asset, a digital alternative to cash. If Bitcoin continues to perform well in the post-halving months, this trend could accelerate. And let's not forget the global picture. In developing countries, where inflation is out of control or financial systems are broken, Bitcoin offers hope. A borderless, permissionless money. As mobile access expands, Bitcoin adoption could rise fast in these regions. It's not about speculation, it's about survival. Environmentally, Bitcoin is evolving too. Critics often focus on energy use. But the narrative is shifting. More miners are turning to renewable sources, using excess energy, or even stabilizing electrical grids. And with having reducing profitability, there's more incentive than ever to go green. So what comes next? We'll likely see a period of consolidation. Some doubt, some boredom, then momentum. If past cycles repeat, even loosely, Bitcoin could start climbing gradually. Then, dramatically. Media will fuel it. Retail will chase it. Institutions will strengthen it. And somewhere along the way, the world will start to take Bitcoin seriously again. But remember, it's never a straight line. There will be corrections, volatility, but scary headlines. and it's in those moments that conviction is tested. So, as we stand in the aftermath of another halving, we're not just looking at low block rewards. We're looking at a new chapter for Bitcoin, one that could reshape global finance, redefine digital property, and empower millions and maybe billions of people around the world. Stay informed, stay grounded, and stay curious, because in Bitcoin, the real story always begins after the halving.